Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. Hope that you are all having an awesome week so far. We are excited to trade today. Maybe the market will finally move a little bit with Jay Powell speaking later this afternoon. To talk about today's trading and what we can expect, we've got an awesome panel with us. Coach Dipka, good morning. What's going on, brother?
Good morning, Alejandro. Excited to be here as usual. Ready to go for today. Jay Powell speaking, so hopefully we'll break out of this range today.
That is the hope for sure. All right, Money Mander.
Good morning. Hit the nail on the head. Powell plummet today. Let's do it.
Powell plummet. The perma bear hat. We haven't even gotten to Fed forecast, and this guy is already shitting on the market. Relax. Take it easy. Take it easy. All right. Diamond Trades. Good morning.
What's going on, guys? Good to be back. Missed Monday. Let's get after it. We had a good show today.
All right. Stock Sniper.
Good morning. Hoping we could get some Fed volume today. Really looking forward to some good trading today with finally some nice volume.
Absolutely. Things have been super, super slow as of late. Okay. And who else we got? Ramsey Rippers.
Good morning. Good morning. We'll talk a little bit about Powell and Bet the Bell. So let's get started.
All right, let's do it. Let's start with our Fed forecast. Noah, Money Mander, what do you guys got for us today?
Yeah, so obviously today is going to be a huge day, right, for the markets. We had GDP projections this morning that actually just came out. So let me take a look at those. I believe that they came in higher than expect. Yeah, so we had the second estimate for Q3 GDP growth rate quarter over quarter came in at 2.9% over 2.7% consensus and 2.6% forecast, showing that the market's a bit stronger than we sort of expected the economy in that growth rate. So that's definitely something to pay attention to going forward. We have JOLTS at 10 o'clock, so that's going to be your job openings. Like we've talked about in the past couple of shows, that labor market strength has really given the Fed permission to be super aggressive on policy. And so if we continue to see that labor market strength, you can expect to see the Fed continue to be aggressive on policy. And then obviously the primary event of the day is going to be that Powell speech at 1:30, right? And so Powell is going to talk at 1:30. It's not an FOMC meeting and it's not a minutes release. And so why is everybody freaking out? Why is this so important? Well, Ryan, if you could pull up that chart of Jackson Hole, we'll see exactly why this is so important. The last time that Powell came out, and it wasn't a FOMC, it wasn't a minutes release, it was just him talking on the state of the economy and inflation, et cetera. He gave some really hawkish comments at Jackson Hole, sent the market plummeting for like 4 days straight. We were down like 5.5% in the S&P. And so I think that's why people are paying a lot of attention to this event in particular, just because of that recency bias of what happened last time, right? So that's going to be important. He's going to speak at the Brookings Institute at the Hutchins Center on fiscal and monetary policy, the outlook for the economy, inflation, and the changing labor market. So it'll be interesting to see where he stands. One thing that we talked about last night going into this meeting is that the risk reward here really is kind of on the downside. So we'll start here. Just on a technical basis, the market is overbought, right? If you look at stochastic RSI, and Ryan can pull up that chart for us. If you look at stochastic RSI, the market is overbought. We're trading into resistance at this $400 level, this 200-day moving average on the daily chart, right? So that's one. Two is that when we had that minutes release come out last week, and everyone really started to the market began to price in this 50 basis point move for December, right? That's sort of the consensus. The Fed is going to hike by 50 in December. We've already got, a bit of the Fed has already thrown the market a bit of a bone here, right? We've already rallied on this idea that, they're going to slow the pace of rate increases. I don't see how much more dovish he can be in this speech, whereas I could definitely see him coming out and, again, having a bit more of a hawkish tone than the market expects, and then the market, sells off because the rally that we've had off of the back of this news is a bit overdone. So in my opinion, the risk reward here is going to be to the downside. I could definitely see there being a lot of room to move down if Powell does want to come out and give some hawkish statements today at this conference.
Spot on. I mean, we've rallied 550 points here off year-to-date lows. And so my thing is, if he comes in, he's not going to come in extremely dovish. It's either going to be more neutral or hawkish. we're already at the top range of that dovish neutral area. Like nothing he's going to come out and say could potentially rally us another 300 points here, right? We basically get something where we trade within this plus or minus 100 points from this 4,000 SPX level, or he comes in hawkish and rolls us over like as happened at Jackson Hole. So Ryan, if you could pull up the VIX chart for me here, we were just hitting on this as well recently on the show, how cheap volatility was being priced in, right? And so I'm not going to do a whole short game of monologue for you here, but VIX in and of itself is derived from dealers' pricing of implied volatility on SPX option pricing. And so basically the stock market's a stair up and an elevator down. Everyone knows this. So as volatility increases in the sell-offs, because the sell-offs are going to be more aggressive than your buy-ups, the VIX increases. So that's why you're going to see it's kind of like this inverse stock or inverse fear index. You can clearly see here as we get under this 20.50 or just call it a $20 key level here on VIX. This is all year. This has been your time to long vol, get short. Eventually, I think the longest we had in this range was maybe 6 days under 20. And immediately you see some type of event come in where we get these aggressive sell-offs. And this is really where you see such aggressive sell-offs because as we roll over, volatility is being priced so cheap that market makers basically have to like catch up. They're pricing these contracts too cheap for the volatility we see on these rollovers. And so let's go back historically. Jackson Hole. Right now, the VIX closed yesterday at just under 22. This would be a plus or minus like 1.4% intraday move. Jackson Hole saw 3.4% intraday on the sell-off. If you go back to April here, April 21st to the 22nd, when we had the VIX in that 20-point range, under 20 there. We saw a minus 5.4% move in the S&P. The VIX rallied 39%. Back to February, 4% down in SPX over 2 days. The VIX rallied 53% over those 2 days. So this has really been your spot to get short. I think we're just poised for a big move to the downside, or we kind of trade flat on what he says here.
Exactly, yeah. And I will play a bit of devil's advocate where, like you said, I really, in my mind, we are either going to get some hawkish statements or it's going to be like relatively neutral. I could see a scenario where neutral winds up being bullish, right? Where if he comes out and doesn't say anything absolutely crazy, we could definitely see a short-term pop. So that's what I'll be watching for today. I kind of expect some choppy price action into the meeting, but afterwards, yeah, if we get some sort of like neutral statement, I could definitely see my bias will be to the upside. Anything less than neutral, the market pulls back, in my opinion. But that's going to be it for us. We'll pass it back to Alejandro.
All right. Thank you, gentlemen. Let's now go over to Coach Dipka for Coach's Corner.
All right. Good morning. Good morning, everybody. Today, we are going to pull in the best. Okay. We're going to pull in diamond trades for Coach's Corner here. And one of the hot topics around Twitter and in the news right now is the impending war brewing between Apple and Elon Musk. So we have the world's richest man versus the world's biggest corporation. So diamond trades, the question is for you to start. The people want to know what happens if Apple pulls Twitter from the App Store. What are your thoughts on this situation?
Geez, this is a tough one to make my Coach's Corner debut. I will say, Elon's already said that he's going to start. He would just make a new phone, right? Which everybody looks at as like, okay, yeah, like sure you will. But if anybody would do it, it's kind of him, right? And I think if you're Apple, you're in a situation where you could call this guy's bluff, pull Twitter from the App Store, and force his hand and go force him to make a new phone or whatever. But like, is this really the guy that you want to be going up against? As a company, I feel like they'll find a way to resolve the situation. My problem really, I think that the risk is really more so on Apple's side because Elon seems like a dog with a bone here, right? He seems like he's got a bone to pick with Apple and that he's not going to stop unless something changes. And that's really their core business model, right? They're 30% that they take off of everything in the App Store. And if they give a concession to him and Twitter, they've got to give a concession to everybody. So it'll be really interesting to see how the game theory plays out between, Apple execs and Elon. But in my opinion,
listen, my friend, in Coach's Corner, we don't do this. We don't play the middle ground, right? Who are you taking in this battle between the mammoths? Are you taking Apple or are you taking Elon here, and why? And also, well, I'll elaborate once you pick.
I would take Apple if I had to choose one or the other. I would take Apple because they have the resources. They have the resources. Elon's the richest man in the world, but Apple is the richest company in the world. And
Okay, now
over $1 trillion.
Now, let me ask you the question. What, like, obviously this is about stocks and investing, right? So what does this mean for Apple shareholders then? Because Elon has actually went out and said on Twitter, and listen, he literally bought Twitter. We've seen him do these sort of impulsive things that he said he would do. What does that mean for Apple shareholders if he does go out and create a competitor?
If I'm an Apple shareholder, I am imploring Tim Cook and the rest of the executives over there to make nice with Elon Musk. Again, this is not somebody that you want to go to battle with, right? I mean, he's obviously shown the capability and wherewithal to execute on a lot of these ideas that people thought were impossible. And so if I'm an Apple shareholder, like I am actually, I would be imploring executives to really make up and resolve this situation as quickly as possible. This is not an adversary that you want as an individual or as a company.
All right, now we're gonna what we're gonna do is we're gonna bring in Money Manor because I know he's salivating over there in the corner. Money Manor, right? You're the biggest bear there is, and this is obviously involves some of the bigger companies across the S&P. What does this mean then for Tesla shareholders?
This gets me fired up here. I don't really think that this escalates into anything though. So, I think neither company here, neither Tesla and Elon or Apple really take this war on because neither has really anything to gain by this, right? Like Apple's already kind of hurting their business by taking ads off of Twitter, saving money, but I don't really think the exposure aspect is all that great. Elon's now getting screwed because Apple's not promoting on Twitter. He just sunk like what 54 billion into this thing, and now the biggest company in the world is saying they're not going to advertise or give you a single dollar. So like, I think this boils down like not much falling out of this. But in terms of Tesla shareholders, I don't know. I mean, I don't think anything comes out of this. So if I'm a Tesla shareholder, like I'm feeling fine. Nothing really changed.
Yeah, from me, I will say, I'm a big, obviously, supporter of some of the stuff Musk does, but this one, I just don't know if it's the right battle for him. I kind of have to disagree with Diamond here, where he's, saying Apple's got to play nice. I think Elon's got to try to play nice here. It's pretty clear that, Apple, maybe the ad numbers came in for Twitter. I heard that he actually didn't share them yet. So, people are speculating, hey, maybe those numbers are not looking too hot and Apple could be a big part of that. So we're going to have to see how this plays out. Obviously, it's all speculation right now, but clearly something's brewing. So we'll keep an eye on this one and see how it develops. We'll pass it back now to Alejandro and get back into some of today's watches.
All right. Thank you there, Coach. I'm now going to share my screen, guys, and we're going to talk about the system. So the main system trade so far this week was, of course, Monday's sell signal. We jumped on that. Perfect system trade. So what we got was the bearish cross of the 10 SMA below the 50 SMA on the 30-minute SPX chart. Consequently, we got a 2-day sell. Now, we have to take a look at the hourly chart and take a look at what's going on here. So once we got the breakdown below the 50 SMA on the hourly chart, I was tweeting yesterday that the 50 SMA was going to be my main focus. It ended up marking high of day yesterday. So as you can see here, we came up to test the 50 SMA, the market sold, and then we got a bounce. So now going into today, what is it that I'm expecting? What is it that I'm sort of looking for? Well, at the moment, the 50 SMA on the hourly chart is still flat. So we don't have that real confirmation of a downtrend. But if I were to take on a little bit of bias, I would think that the market would trade lower just because we are in sell territory on both the hourly with this bearish cross and on the 30-minute with the bearish cross here. But very, very important to understand and very, very important to remember. Anytime we have a volatility inducing today, which I'm assuming, Powell speaking, will bring volatility to the markets, the system cannot be, I don't want to say trusted as much, but it's important for us as traders to recognize when the market is about to learn something new, And when you have something that could potentially move the markets, that's kind of out of our control. So in my opinion, it's best to react. Could we get some decent price action to trade early in the morning? Sure. But as far as, short-term trend, thinking about day-to-day trend, I'm having trouble, quite honestly, identifying it right now in this position. So what I'm waiting for is for Powell to come on, for Powell to speak, and then I can attack and look to take some trades. So it's always very, very important to recognize those scenarios when, okay, things look kind of obvious. For example, the sell signal on Monday, right? Break below the 50 SMA curling over flat, serving as resistance. You get the crossover, you get the sell-off. And the hourly chart was telling the same story when we started to break down there. Those are the type of trades that we like to take, right? Now is time to be patient, let the market kind of figure itself out, and look for the next best opportunity, guys. All right, so I hope that makes sense to everybody. So that's what I'm going to be taking a look at as far as the system is concerned headed into today. Now let's talk some levels with Coach Dipka. We'll pass it back to him for Dipka certified levels.
All right, back to me here. So you know the drill, guys. We're going to pull up the daily levels. Half you're still in bed. That's all right. Got you covered. We got a bunch of levels today. I know the chart's looking messy. It's not pretty. I'm going to clean it up for you on the top watch day at the end with 2 lines, make it much more clean. But we have to understand that Powell is speaking today, right? So this means listen, this is a little bit of a hopeful chart. Hopefully we see 405. Hopefully we see 390. We'll see what happens. Well, let's get into the levels, right? So first, I'll draw your eyes to that 398.12 fib to 399.79. We have just an overall supply zone. I have a couple fibs I'm testing here, and I really like that 399.06 and that 399.79, which we call it 400, right? So 399 to 400 is going to be my big supply zone for the day. My big support for the day, if Powell comes out and speeds up this market, is going to be that 392.51 to 391.68. So 392.51 to 391.68 is my support. 399.06 to 400 is going to be my resistance. Okay, we break that resistance, which is kind of where I'm aiming at today or hoping for today. We're looking at 405 potential, 404 to 405 in the coming days. Okay. That is where I'm aiming at for a bigger picture short trade. All right. I'm hopeful that Powell gets us up there. We'll have to see. Also notice this kind of random 395.25. It's not random. It was yesterday's massive pivot level. So I'm going to be looking at this level to play during the day before Powell, just for pivots, shorts below it, longs above it, right? And then once Powell sort of hopefully breaks us out of this range, I'll look at these blue lines as my, the levels I just went over, all right? So done perfectly in 60 seconds there. It gave you all the levels for today, right? You came unprepared, but I got you covered. Now, we'll pass it back to Dwayne Trades to put you guys back to bed.
Thank you, Coach. Over to Ramsey Rippers. Ramsey.
All right, guys. Once again, bet the bell. I'm going to ask a couple questions to our panel of traders. Market-related questions. Going to give me their answers at the end of the week. We will tally them up on Friday. See who has the best answers and see who sucks. So, as our macro experts touched on earlier, we had some economic data drop this morning. GDP, unemployment. We got Powell speaking at the Brookings Conference, Brookings Institution, 1:30 p.m. today. Loaded catalyst day. Indices look like we're going to open up just about where we closed yesterday. So with that being said, are we closing green or red today? Alejandro, talk to me.
I'm going to go red, honestly. Just looking at the system, I think that that's the best bet.
Gotcha. Diamond.
I'm going to go red. I can't share that chart of Jackson Hole and then say green. I can't do it. So I'm going to go red.
We spoke about that yesterday. Dipka?
Well, news for you, Diamond. This is actually not Jackson Hole. And Dwayne, the system, as you said, doesn't work very well on volatility type of days where we get this great volatility from JPOW. So I'm going with green. And they say Coach Dipka may be wrong once, but he will not be wrong twice in a row. So green today, over 400 by the end of the day.
Let's go. Dipka spicing it up. I see Money
Over
Mander
400.
shaking
I'm
his
not.
head.
No, I have. Listen. I have technical reasons we'll discuss in the top watch today, and yeah, we'll get into it later.
I love it. Adding some spice to the show. Money Mander's shaking his head in the bottom of the screen. I can see him really small right there. Let's
Did anyone catch this guy during his levels? He said, I hope Powell brings us up here. Dude, the Powell pump is over. It's done. No more Powell pump. Powell plummet.
Sniper.
Dude.
I think that Powell has nothing really good to say, and I don't think that we're going to see a positive reaction. So I think that we could see SPY actually break the 390s today.
Hey, everybody! I just want to point out. That you see when everyone's on one side, it's my indicator, right? It's my indicator for a fucking trap, and Mander will be left with a bag of graves today. We're gonna record this, and I'm gonna post it tonight on Twitter. We'll look back. All right.
This could be a good one. I'm excited for this.
If Mander didn't have Fed forecasts, I don't think we'd have him on the show. He just comes on here and just like shits on the market. Like he's like doomsday. It's like doomsday prepper.
Half my watches
Ruining
are
my
upside.
morning, dude. Like too much negativity out of you.
We can make money on the way down. Half my top watches are upside anyway. I call it how I see it.
Calls it how he sees it. All righty. Next question. So we're going to go back to this energy sector. One of our macro experts gave his 2 cents on energy in Monday's episode. I really want to get the rest of the team's opinion as well. So energy names been relatively flat at the top of their respective range. You got XOM, XLE, even Chevron, all flat near their all-time highs, which hit within this last month. So what I want to know is, does energy get this convincing pullback? Are we primed for this pullback, or are we going to continue higher? Diamond, let's hear it.
I'm going to say energy pullback. I forget exactly what it was, but I think hedge funds are the largest net short energy that they've been since 2020 or something like that. So if those guys know, I know. Short.
Snipe.
I think that we could see a little continuation in energy. Overall today, XOM does have a nice looking chart.
Money Mander.
Yeah, so we jumped the gun here a little bit saying the pullback at 95, but this time I'm really sticking to it. The divergence here has just gotten out of control. It's outperforming crude oil by like 30% right now. So I think the sector's got to pull back. Whether we see some relative strength into tech or some high betas, I don't know, but money's gonna reallocate out of the sector, take some profits.
All right. We didn't even need to come to you. We heard from you Monday and really every episode.
Yeah, you know where I stood.
Yeah, Hondo.
No stance change.
Yeah. Is this the same question? The energy.
Yeah.
So I'm not gonna do what Snipes just did, which is fumble the bag here. I'll be honest. I haven't looked at the charts. I feel like that's better than just giving a BS answer. So.
Gotcha. All right. So we're gonna go to our last question of the day. There's no surprise. Powell 130. Gotta ask about it. Gonna keep it short and simple. Powell pump or dump? Whole team. Give me your answers. Noah.
One more time? I didn't hear your question.
Powell pump or dump?
Good thing it's on the screen, Noah.
Powell dump. Hondo, go run something, dude. Powell dump.
Snipe.
Dude, I want the pump. Powell pump, I want.
Hondo's got the pump. Snipe, what do we got?
I got the dump.
Okay, Dipka.
Dump. No, dude, you guys know my answer. We went over this 100 times.
Yeah, but what do you mean dump?
Today.
You just said, but why did you just say dump?
Because we heard this question already.
Yeah, but why did
If
you
coach
just say
plays both sides, he can't be wrong, guys.
Exactly. Little
That's
straddle.
kinda
No,
like I did.
you guys know where I stand. You know where I stand today. We'll get into it in the
Gotcha.
top watch. We're ripping today.
And Manders
I
probably
don't even
dump. I'm not sure.
Yeah, wonder what Manners
All
gonna
righty.
say here.
That does it
Long
for
vol.
Bet the Bell. Hondo.
All right. Let's wrap up the show here, guys. Today's top watches, most important segment. We're going to go around and ask the head traders what it is that they're taking a look at headed into today, starting with Coach Dipka.
All right, so I actually pulled up ES here for you, and we have 2 levels that we need to watch. We have The big support for the day is that 3912. Now, I don't think we touch that. Actually, I don't think we breach yesterday's low at 3940. If we do, I'll admit maybe I'm wrong here, right? So what I'm really anticipating is we have that clean double top and those equal highs. If anyone knows about ICT, those equal highs at 4050 is something I got my eyes on. I mean, there's plenty of liquidity resting above that level. I think that the market wants to trade into that. Okay. I feel like really expecting to see sort of a magnet to that 405.0.75. And my entry point, I'm not exactly sure of, because I think originally when Powell gets on, we could see a little selling, a little fear, but we know how these events work, right? The first move is not always the real move. Ultimately, end of day, I expect us to test or be on our way to that 4050. I don't know if we'll get there today. That is a 75-point move, but by tomorrow, I expect that 4050 to be taken out. Now, if we're underneath that 3940, maybe a little concerned, and underneath 3912, I'm definitely wrong about this, but I feel strongly that 3940 level from yesterday will hold as support. That's going to be about 394.40 on SPY, by the way, if you don't want to follow the ES levels. All right, so I'll pass it back to you guys.
All right, thanks, Coach. Noah, what do you got?
What's up? Before I go, I just wanted to clarify what I said about the energy short. So hedge funds net short, top 4 names that they're net short: Exxon, Oxy, and Chevron are 3 of them, right? 3 of the top 4 net shorts for hedge funds are energy companies, which is, just wanted to clarify what I said before. But for me, top watch today is going to be Amazon. Amazon has a gap to fill down below, has been trading really weak relative to the market. They kind of look like Google in the sense of the weakness. And so I'm going to be watching, particularly if we can get some downside today from Powell, I'll be watching for Amazon to fill that gap to the downside and look to take advantage on some puts.
Mander.
Yes, sir. No, 90 puts need a buddy. Come right along. But my top watch is Apple today. And so ICT this and liquidity shelf wherever Schlett's looking. The markets are going to say FVGD's nuts. Look at this setup on Apple. Like, this is the most textbook head and shoulders. They called me crazy wanting to short this thing at 150. I got stopped out of some swings. Now down to 140. No one has anything to say. So I'm watching Apple here. This also has a gap to fill down to like 134, which would give us a daily candle close under this neckline support, which if we zoom out, Ryan, is not only year-to-date support. This is a weekly rising wedge support all the way back to September of 2020. So I'm telling you, if this thing cracks, watch out below, and I will not be on the sidelines as it happens.
I love it, dude. The intensity. I love it.
Everyone's favorite Apple going to the dirt.
All right. Who else we got here? Ramsey.
Yes, sir. All right. Top watch is CCL Carnival. We're trading in this little, supply, 30-minute supply and demand range, lower 920s to low 980s. Right now, trading at about 975. Going to open up at the top of this range. If we can break through 983 resistance and start to retest that gap fill, I could see us filling up to 1060. If not, watch for a support bounce around 921. So really 983 is the main gap fill entry level I'm watching today.
All right. And last but not least, Snipes.
What's up, guys? I got 5 levels for you guys today. The top one that I'm looking at, which is a pretty nice rejection level, is 396.65. I'm going to be watching this level. Under here, we got 396.08. Right here is where I start to see a little bit of rejections right here. I got 395.20 as a bounce level. Then I have 394.64, another level for you guys. And then last but certainly not the least level, I got one down at 393.65. This is a pretty nice bounce level right here, and I'm going to be looking at this one throughout the day.
All right. Thanks, Snipes. All right. That concludes this morning's show. Thank you, everybody, for joining us for another episode of Beat the Bell. Coach thinks something is super funny right now. I'm not sure.
We should just call this like Dipka versus Mander here. I mean, we got to change the name of the show.
Dude, he came for your neck.
Listen, someone
no
at
reason.
the end of the day today, someone is going to be like,
Someone's getting
just
clipped.
brutalized and clipped on Twitter. I mean, this is not going to end well for one of us.
I'm
And
excited.
I'm confident that Mander's going to be sitting there like a Louis store with just a load of bags.
Dude, Mander might bring out the if it goes well for him, he might bring out the black tux and turtleneck for Friday.
Oh, yeah, the funeral fit. All right, guys. Thanks for tuning into the show. If you like the show, give us a like on YouTube. That helps us out a lot. For those of you that don't know, we have 7 head traders, the 6 of us, and Mo trading all day, every day, live in the Kane Capital Discord. You can go to kane-capital.com to start trading with us. Have a great day, everybody. Best of luck. And we will see you on Friday morning at 8:30 a.m. Eastern. Have a good one, everyone.